The 2022 budget is looming ever nearer. It looks like it's probably going to be even better than MTBPS. What's driving this?
You're right, Siobhan. This is going to be yet another budget where National Treasury really does not have to do much to tell a good story, as the tax revenue side of the equation just continues to perform better than what they had expected at MTBPS. And that's really been driven by high commodity prices, which has boosted profits of mining companies, and thereby CIT receipts from the mining sector in particular have continued to outperform what National Treasury had expected. So we're looking at tax revenue likely coming out about 68 billion, better than MTBPS for this current fiscal year, which is really great. And over the MTF, also over the next coming 3 years, we are looking at a much improved profile because it's just growing from a higher base. Even when you correct, for lower response in terms of the elasticity with tax revenue to growth, you are still getting a much improved tax revenue outlook, which is likely to be about just above 270 billion, better than MTPS over the next 3 years. So honestly, the tax revenue side of the equation continuing to do the heavy lifting.
That's fantastic. But then does that mean that government is going to be spending more than was planned? And what does that then mean for our deficit as a whole?
We are expecting an increase in expenditure, one coming from an extension of the COVID grant, which was announced by the president at SONA, that the COVID grant is going to be extended by another year. We have assumed that it actually gets extended for 3 years over the MTF forecast period, and at an initial cost of about 40 billion, growing in line with inflation and the number of recipients which we have assumed. We also think that there's going to be some adjustment to wages. So mostly the wage deal reached this year are being rolled over for the next 3 years, also, adjusted in line with inflation. So overall, we do see expenditure higher by about, 185 billion. So still lower than that, just above 270 billion that I talked about on the tax revenue side. So that, already tells you that the main budget expenditure is going to be way much better than what National Treasury had expected in MTBPS. So we do have the main budget deficit tapering off at about 4.6%, negative 4.6% in fiscal year 24-25 versus National Treasury's 4.9% estimate. But importantly, Siobhan, is that our deficits still don't go back to pre-COVID levels. And really just continue to show that there's still a lot that government really needs to do in terms of deleveraging.
Absolutely. And that's a major concern. We know that, for example, your interest expenditure line item is one of the fastest growing line items for the fiscal expenditure. And, that's just paying back money that we've borrowed, not actually going into the economy. But, we are looking probably at more permanent higher expenditure, particularly in the form of the special relief of distress grant, as you have already mentioned. But, it does seem that there's quite a lot of kind of muttering about a basic income grant. Would this be the replacement? And how could it or would it work if we had to have one?
So, interestingly, Siobhan, in the SONA, the president was very careful around, his words and how he, worded it. But he did indicate that for now, the COVID grant is going to be extended for a year while government looks at a more viable solution. He did indicate that, it's going to have to be affordable and sustainable, but really that, our expectation is that government is working on some sort of basic income grant. It's not a matter of whether it's going to happen or not. I think it's become a matter of when is it going to happen and what form and shape is it going to take, and at what level is it going to be offered. So that's sort of our baseline expectation. For now, we've only assumed the COVID grant gets extended because there's still so much that government needs to decide on in terms of the shape and form that a basic income grant takes. We've looked at 3 scenarios where basic income grant is offered at the different, various poverty lines: food poverty line, lower bound of the poverty line, and upper bound of the poverty line. And we are assuming that this is then offered to unemployed people, with the starting number of recipients at about 10.1 million. And our analysis shows us that, with the tax revenue windfall, it can be, a basic income grant at a food poverty line, which is 624 Rand per person per month, given to about 10.1 million recipients, is most probably viable over the 3-year period of our analysis, given the tax revenue windfall that we've received. But of course, that assuming that the impact on growth is neutral and is not perceived negatively by the market, because that can increase, the interest rate bill that government has and make it, unviable. But also that means, Siobhan, that for it to be sustainable over a longer period, government is going to really have to accelerate the structural reform agenda to make sure that growth is lifted, and that more and more people are absorbed in the labor market, to really just reduce the number of recipients receiving this grant. Because if we do continue to get stuck in this low growth environment, even a basic income grant at a food poverty line can become unviable, taking us deeper into a fiscal crisis.
So Treasury faces one of kind of two paths almost. One where if we manage to have government working together and producing the structural reform, not only do we see fewer recipients in the future for grants, but also probably a greater contribution to the tax revenue collection, versus that base that needs support from government increasing, with that tax base that's contributing actually narrowing. So it is quite a dilemma.
It is a huge dilemma that the National Treasury will have to weigh. And this is what supporters of a basic income grant and, those not really supporting it have argued that, on the one hand, it, likely unsustainable and unfeasible, as it's going to throw us into a deeper fiscal crisis. Others have, argued that the social cost, which is high unemployment, high poverty rates, high crime rates, are just enormous. And unfortunately, that's the dilemma that Treasury is going to have to weigh. The social cost versus the fiscal risks is quite a tight balancing act.